Hello guys, good morning. This is an essential disclaimer. The purpose of this video is for educational and informational purpose only and does not constitute financial advice. The advisor status: I am not SEBI registered certified financial advisor. Risk warning: stock market investments are subject to market risk. Past performance does not guarantee the future result. Responsibility: viewers should conduct their own research or consult a professional advisor before making an investment decision. Okay, so I have seen so many videos and I don't know how authentic, and so based on that past video or the video which floating in internet, that many people are losing, they are ruining their life by investing in stock market. So why is it so? That we are going to analyze here, and this data is a very minimal data, so we can't predict what will be the situations in stock market. Based on that we can invest. So that's what it's stock markets influenced by many factors. It's not so easy to analyze, and that return also out of it. So what I would like to say here is the people has to start calculating, not blindly believing on advices that this stocks is good, that stocks is good. So even I'm just a trader. I have started since pre-COVID, and then I have also trapped in some recommendations on TV channels, and later point I found that he has barred from the SEBI has barred and imposed a huge penalty. So many things that we have seen, right? So even I also bought that stocks, and I I got trapped. So I have, if somebody wants proof, I can show that proof in my screenshot, and anyone can claim that if I am doing some false statement, that I have I'm not doing the trading and all. So come to the point. If we calculate the data, right? So this is a nifty 50 data for last 10 years, right? And we have seen so much volatile during pre-COVID and post-COVID. So if we take 2020 and 21 here, this is the post-COVID data, right? And what we are seeing is the war. So that's what I said is war. The is the one factor. The economic, the country economic, the how the government is making their policies, everything. There are multiple factors. So this is, again I repeat, is a very simple factor that we are analyzing here. So what we are going to see, the lowest that average, if I see on to 2017, and the highest is the 2022. So I'm just taking the deviation from these two data. So what I would like to show in different slides. So if I see the percentage of deviations, yes, this has very low deviation, this has very high, little higher than this. What does it mean? So it means, for example, if we have invested in this deviation, this is a deviation, this is not a chart, this is the deviation. What does it mean? It's highly deviated. So the on which day, if I say the highest deviation is on 700 points deviated, 700 points ups and down happened. Sorry, it's not 700, it's 800. On 2018 we have seen the volatile. We can see what happened in this day. So the market may have fall or goes high, right? So if falls, then whoever has invested the prior to one day, his money will be lost, right? So the deviation shows that the if we are we saw that falls like 2020 March month, the market crashed, and if the one who is very prudent or very intelligent enough, he could have waited pre till 2020 March month, and on fall, if he has invested, then he might have make a good amount of money, right, when it's gone up. So it's gone up on 2022 5, so it's been 1 year, so market has given a good return. So what it says here, so people, we don't know where to invest, when to invest, and how to invest. We just go with the recommendations, right? So if you see this, suppose we are invested since 2016 till this date. So how much volatile? So suppose if I invested 100 rupees, right, in 2020 16, so in 2025 how much money we could have gained? So during this period we need a strong strategy, else the stock market will not provide any benefit. It will be a normal FD return, or it will be it more worst as well. So I would say, suppose if someone is investing in RD, for example, right, 5,000 in bank, so people say RD is very bad. So I would say कि now this much, any percentage, say suppose 6 or 7%, right, but we are guaranteed that this is what we are going to get, right? There is no doubt, because it's backed by government or governed by the banking, governed by RBI, but governed by the IRDA. So we need to think how much money we are going to invest here, how much money is going to invest here. We should have a balanced strategy. We should not jump into the stocks. People say that it is really good. I have seen many of my friends where they have lost huge. They have put all money in the stocks, in one stocks, and that's all. They ruined one stocks, which I would like to say it went 32, and that stocks fall to 19, and he has 2.5 lakhs stocks. So imagine how much he has bear the loss. So ultimately we have to think of the calculation, whether on an average, right, if we are keep investing, how much we are gaining, or what strategy we implement so that we can gain from stock market as well. So if you need any video on strategy, my strategy, so please comments in my please